So, can a yield improve your borrowing capacity? Now, the answer is yes to this, but of course, is it important and is it something that you really need to focus on? Maybe not, depending on the individual. So, this all depends on your goals, your personal situation. Your finance situation is very important. So, a person that is, earns 60 grand a year, lives at home with their parents, and say they're 25 to 30 years old, compared to someone that's 50 years old, they earn 150 grand a year and they've already got 5 properties. The yield is, of course, the yield's going to help them. It's going to help the individual depending on the circumstance, but it might not be important to the individual as well. So just a rule of thumb, it depends on the lender. Once again, there is over 400 banks in Australia, but depending on the lender, of course, a 1% difference in a yield can change the borrowing capacity dramatically. So let's say your property is yielding 4%, and then you got another property yielding at 5%, and let's say the purchase price of both of those properties are $400,000. So a $400,000 property, one's at 4%, one's yielding at 5%. The borrowing capacity on that can change your borrowing anywhere from $50,000 to $100,000, depending on the lender. So, and that's improving. The higher the yield, that's going to improve your borrowing capacity. So it is important, but it's something to not get too caught on and say, I need to get this yield because it's going to help me. Once again, I've got some properties yielding at 6%. I've got some properties yielding in 5%. And it's not too relevant for me at this point in time. Earlier on, when I was starting to get my foot into the door, yield was important. Of course, I didn't have a strong income back then, as what I do now, and you wanted to have a property that's yielding. So it was, of course, it was back then it was cash flow positive, but the higher the yield was, the more cash flow I was going to be getting, and it was going to help me in those circumstances. Where some individuals now, my circumstances now have changed. My income is a lot more stronger compared to those days, and I've got a lot more property now back compared to those days as well, and it doesn't really bother me if it's a 4 or 5% depending on the property as well. So it does improve it. And of course, if you're someone that's starting out and you're building your property portfolio, and you're someone that's got just an average income, $60,000, $70,000, $80,000 a year, and maybe you live at home, maybe you're renting where you live, then of course the yield's going to be important to you from just sort of repayment perspective, as well as from a borrowing perspective as well. So that's important for the individual as well. So hopefully that gives you a bit of clarity. It's all tailored to your personal situation, okay? But a little quick short video. I don't want to get touched on this too much because they can take people away from finding a good property and not buying that property as well, because sometimes they're focused on that yield. So please make sure, and full disclaimer, to speak to your mortgage broker to understand this, to get a bit of an understanding for your personal situation, and then of course making sure that their advice as well fits with your goals and is tailored to your goals. Make sure you give that advice to them so they understand what you're trying to do. An accountant is very important when it comes to this sort of things as well, and then just understanding your own, accountant background, or your accounts. For your own personal accounts as well. So what is your current expenses on a month basis? What can you afford? What can't you afford? What does the property need to be? How much is it going to put in your pocket? How much is it going to take it out of your pocket on a monthly basis? So then you can run those numbers and understand what that looks like financially, so then you can understand. So understand how much your expenses are per month, what your income is per month, and of course how much you're saving per month. Then understand, okay, the property I'm buying, whatever the yield is, regardless of the yield, what is it going to cost me, or what's it going to put in my pocket, depending on, of course, the interest rate and the yield. And then say to yourself, okay, I need the property to be X amount of yield, of course, to be able to give me the freedom or the opportunity to buy the property and still be able to live my life day to day. Then, of course, having that conversation with your broker and asking them, what sort of yield do I need, or what yield would help me get into the next property, improve my borrowing capacity, I can get property number 2, and speak to them about that, because you want to make sure you're not just buying property number 1, you want to make sure you get into property number 2, because of course the 1% difference or a 2% difference in the yield is going to determine if that's going to help with getting into the next property as well. And so speak to them, run your numbers, do your calculations, tell them about your purchase price is very important as well, and understanding what you is going to be. So they're the key takeaway points there. There is a bit of work there, of course, to understand the process and how kind of the game of finance works. But the old saying goes, property is a game of finance. It's not about the brick and mortar of the mortise of the building. It's about the numbers, and if it makes sense. Okay, so hopefully that helps. Hopefully that gives you a bit of clarity. And if you do have any questions, or you want there's some personal question that you need answered, and you like to have a chat, please don't hesitate to reach out to us here at Fresh Start Advisory. Okay, we'll see you at next week's poll.